In this video, I'll be sharing 3 compelling reasons why I'm buying Amazon stock after this recent dip, and why I'll continue buying aggressively if the stock price keeps on falling. As you'd all know, the stock market has been incredibly volatile lately, given that inflation is still roaring, leading to the Fed taking a more aggressive stance on raising interest rates, and more importantly, the US GDP actually saw shrinkage this past quarter. Kinda like when us boys jump into some cold water. Okay, forget I said that. Anyways, the news spiked fear among investors since only one more quarter of negative US GDP growth would lead to us being in a recession. Therefore, investors have been extremely cautious lately, plowing tons of money into safe consumer staple stocks like Johnson & Johnson and Costco, which have done extremely well as opposed to the tech-heavy NASDAQ index. Now, when it comes to all this market volatility, my strategy is not to put my money where I think it's going to be the safest over the next 6 to 12 months. My approach involves doing the opposite of most investors, whereby I'm doubling down on certain tech stocks that have huge runways for growth over the next 5 to 10 years. And in today's video, I'll be sharing why Amazon stock is one of those stocks that I am doubling down on. So if you do enjoy, please remember to tap that like button to help promote this video to other like-minded investors. And if you haven't already, please consider subscribing down below so you don't miss any of my future updates. Alright, so I'm sure it's no surprise to anyone that Amazon stock had a really rough day following their earnings on Thursday, April 28th, where the stock fell 14%, marking Amazon's worst trading day in over 15 years. And over $200 billion was wiped off the market cap in a single trading day. Just think about that. These earnings must have been horrendous for the great Amazon to collapse nearly 15%. Well, in my opinion, they really weren't as bad as everyone thought they were. And by the way, just to give some context on Amazon stock's massive collapse, Apple also reported earnings on Thursday, beating nearly every analyst metric and didn't even offer guidance for Q2, yet the stock was down almost 4% the next trading day. But unfortunately, right now, the market that we're in is completely fear-driven. And even if a stock exceeds expectations like Tesla and Apple did, the stocks will still get punished. Anyways, now that you have a little bit of context surrounding Amazon's huge stock price collapse that was probably quite overdone, I'm now going to be getting into the 3 reasons why I'm buying Amazon on the dip. First of all, Amazon's Q2 guidance for this year was largely misunderstood. In Q1 2022, Amazon reported net sales of $116.4 billion, up 7% year over year. However, for Q2 2022, Amazon guided net sales to be within the range of $116 to $121 billion, representing only 3% to 7% growth year over year. And taking the midpoint of that range, Amazon is only expecting about 5% revenue growth year over year in the next quarter, which is quite underwhelming for a growth stock at first glance. But many investors don't understand that Q2 2022 guidance is based on Prime Day being in Q3 of 2022, while it happened in Q2 last year. Prime Day is the biggest e-commerce shopping day in the year for Amazon and generates billions of dollars of more sales than usual. For instance, in 2021, Prime Day generated an estimated $6.8 billion of sales according to analysts. Therefore, we're seeing a negative impact to growth rates within this next quarter since we are lapping that period of Prime Day in Q2 2021. While in Q3 this year, we won't be lapping a Prime Day period, so this should re-accelerate the revenue growth quite a lot. But it's also very important to understand that Amazon had unusually high revenue growth in 2021 when it came to Q1 and Q2, where the numbers were 44% and 27% revenue growth respectively. Obviously, these types of growth rates are not sustainable for a company of Amazon's size, and therefore things are moving back to the way they were pre-pandemic. So once Amazon moves past these tough 2021 comps, management said they would see a re-acceleration in revenue growth. Furthermore, Amazon's management also confirmed that they are not seeing any softness in consumer demand, which bodes very well for the economy and Amazon overall. Alright, now the second reason I'm buying Amazon stock right now is because Amazon's profit engine, Amazon Web Services or AWS, is still growing tremendously quickly on both the top and bottom lines and is becoming a much larger portion of Amazon's overall revenue and profitability. Here we can see AWS had net sales growth in Q1 2022 of 37% year over year, while operating income grew 57% year over year. Guys, this signals massive margin expansion within the most important part of Amazon's business, and investors should not ignore this. In fact, if we divide $6.518 billion of operating income by $18.441 billion of net sales, we come to an operating margin of 35.3% for AWS in Q1 2022. No cap, AWS is insanely profitable, guys. And comparing this to the same quarter last year, AWS only had an operating margin of 30.8%, which means they grew their operating margin by 4.5 percentage points year over year. So AWS is continuing continuing to get more and more profitable as their business continues to benefit from economies of scale, and I think AWS alone is a great reason to buy Amazon stock. Thirdly, I believe Amazon stock is significantly undervalued at about $2,500 per share. Now there are two ways that we can approach this, and the first would be to check some traditional valuation metrics. Since Amazon's profitability is a bit messed up right now because of the Rivian investment and heavy investments into their fulfillment network through COVID, I'll focus on the price to sales ratio instead of the price to earnings ratio. And right now, as we can see, Amazon has a price to sales ratio of 2.7, which is a 5-year low for the company. We have to go all the way back to January of 2017 to find Amazon trading for this valuation. The other thing I want to point out is that Amazon's margins have been increasing steadily since this time period. First of all, Amazon's gross margin has gone from 10.3% to 14.1% where it is today, and over the same period, Amazon's operating margin grew from 3.1% to 5.3% where it is today. So correspondingly, Amazon's price to sales ratio should be higher than it was back in 2017 because Amazon is generating more profits from the same amount of revenue. Now to prove what I mean, we can see this exact thing happening for Microsoft over time. Back in Q1 2016, Microsoft's operating margin troughed at 27%, but then over the past 5 years, through introducing their high margin software revenue streams, Microsoft has been able to grow their operating margin to over 42% in 2022. Well, guess what happened to Microsoft's price to sales ratio over that same period? Here we can see it over doubled from 5 to nearly 11 where it sits today. That is all as a result of Microsoft increasing their profit margins over time and therefore generating more profits per dollar of revenue, which is exactly what's been happening with Amazon too as their AWS business continues getting bigger and generating more profits, except we haven't seen Amazon's price to sales ratio reflect that. And that is where I see an incredible buying opportunity in Amazon stock. Now the second way I like to approach Amazon stock's intrinsic value is through a sum of the parts valuation model. This is where we consider each of Amazon's business segments as unique independent businesses to see how much they're all worth together compared to Amazon stock's market capitalization. Starting with the AWS business segment, we can annualize their Q1 2022 operating income of $6.518 billion, which comes out to $26.1 billion over a full year. Then, since we know AWS is a very high margin and quickly growing software business with huge growth drivers over the next decade, I believe a price to operating income ratio of 40 is reasonable to assume. By multiplying their annualized operating income by this ratio of 40, we come to a valuation of $1.04 trillion for AWS alone. Likewise, if we apply a price to sales ratio of 14 to AWS's annualized revenue of $73.8 billion, we come to a valuation of $1.03 trillion for AWS alone. Now you might think that these valuation metrics are a little bit high for AWS alone, but we have to remember that Amazon is in the lead when it comes to cloud computing with the highest market share in the industry, and they also have decades of growth to come, so this business is not going to be slowing down anytime soon. Therefore, when we're looking at Amazon's current market cap of $1.26 trillion for the entire company, including AWS, we're only paying around $250 billion for the rest of the company excluding AWS. This includes Amazon.com, Amazon's fulfillment network, Amazon Prime Services, Amazon's advertising business, Alexa, Twitch, Audible, and much more. So when we think about Amazon as the sum of its parts, I think that Amazon is incredibly undervalued just based on AWS alone being worth about $1 trillion. So as Amazon investors, we're essentially getting a free call option on a bunch of Amazon's other business segments outside of AWS and Amazon.com, which could see a lot of growth in the future. So in conclusion, I do believe Amazon stock is a great buy below $2,500 per share for three main reasons. Firstly, Amazon's Q2 2022 guidance was very misunderstood. Secondly, Amazon's AWS revenue and profitability are still roaring. And thirdly, Amazon is undervalued based on both its price to sales metric as well as the sum of the parts model of their business. But keep in mind, just because I'm buying the stock at $2,500 per share doesn't mean that the stock could go any lower. The market can remain irrational longer than you can remain solvent. So it's important for you to do your own research on Amazon and build up a conviction like I have in the stock before you go out and purchase it. But anyways, with that being said, I really hope you enjoyed this video. If you did, make sure to drop a like and subscribe if you have not already. And with that said, I will see you guys in the next one.